Hey guys, Joseph Henson here with Henson CPA Group. I wanted to let you know that we do have a link below that you can click on to schedule a call now if you decide that, hey, we've been doing this a long time by ourselves. We don't understand our numbers. We want to go ahead and make sure we do what we need to. I'm going to jump right into this though, and we're going through why your financial reports are lying to you. Again, I'm Joseph Henson CPA with Henson CPA Group. Thanks for joining me today. And as always, if you have any questions, feel free to ping me or schedule that call and we can talk through them. The frustration many owners feel. Many business owners do review their financial reports, believe it or not. You might not be a part of that, but it does happen. But after looking at them, you still feel unsure. Your revenue looks strong, your expenses seem normal, but something still feels off financially. You're not sure what it is, but there's definitely a disconnect, and it's extremely common. Often it's because the reports aren't telling the full story. They give you a picture, they give you a glimpse into what's happening, but they're lying to you. They're not telling you everything you need to know. That's not saying that they're wrong, but they're incomplete. Your financial reports are only as accurate as the data you entered, the timing of transactions, the way expenses are categorized, the consistency of bookkeeping. Even small inconsistencies can distort what the reports appear to show. What do I mean? If you aren't putting items into your cost of goods sold, you're going to show a higher gross profit than you should be. So when you start to compare that to the industry standards, you will see, hey, this isn't what I think it should be. Why is my gross profit so high compared to the industry? Or why are my wages paid so high compared to the industry? Well, I'm not taking out my owner compensation. It's all in one, wages. So you aren't able to break down all of your numbers. Why is my visit per vet off? Again, you just have it in wages or salaries. You're not actually looking at the deeper categories that they should be. The AHA chart of account is a phenomenal one you should be looking at. There are timing differences. And this is one of the reasons that you can have reports that seem to be misleading. For example, equipment purchases may affect cash immediately, but the loan principal you're paying is on the income or on the balance sheet, reducing the cash on hand, but it doesn't reduce the income statement and your profit. The revenue may be recorded before payment is truly received. You may also have other items on the balance sheet that you don't typically reflect, such as owner draws. This creates a gap between what the report shows and what the bank account actually looks like and how you're feeling. You have more money in the account, you think things are going well. Well, now you have less money, but you're not sure why, because you still had a $40,000 net income month, which is almost never a thing that happens. We're not looking at the whole picture. Misclassified transactions. This is a huge issue and extremely common when it comes to categorizations. If expenses are placed in the wrong category, reports can give the wrong signals. One major example that I see frequently, is personal expenses being mixed into business accounts. Well, really, it's no big deal that I'm getting a tank of gas. I have to drive to the office anyway. Swipe the card. Well, it's not really that big of a deal that I had some snacks on the way home from work. I was hungry. I didn't get lunch. Swipe the card. These are personal expenses. You want to have those separated out. Having equipment purchases recorded as supplies. I bought a new stethoscope. I bought a new x-ray machine. I bought a new ultrasound machine. I bought new lights so I can actually have lights or better lights in our surgery room. These are equipment purchases that maybe they should be on the balance sheet. And then payroll costs split incorrectly. You haven't mapped your payroll to the right categories. This is going to cause an issue. The cash versus profit confusion. I have talked about this before. A business can show profit on paper, but still feel financially tight. Now, this happens because profit measures performance and cash measures liquidity. The profit and loss statement, the income statement, is only a small snippet of what you should be looking at on a monthly basis. You have expenses that hit your bank that don't show up, like your loan payments, inventory purchases, or owner draws. They will affect the balance sheet, but they won't affect the profit and loss right away all the time. And understanding that and understanding the difference is critical to the profitability and the longevity of your clinic. Incomplete data. Reports are only helpful when all financial activity is recorded. Many businesses have gaps. They are missing transactions. They have accounts that are not reconciled, and then they delay bookkeeping updates. They do this quarterly. They do this every 6 months. They do this at year end only. These are issues that you need to address. Even missing a few of these pieces can create misleading reports. If you can't log into QuickBooks today to see how you did last month, we have an issue. We need to be able to do that. Now, this can't happen on a daily basis always, but within a couple weeks, your book should be in a spot where you can start making data-driven decisions. The financial visibility gap. What owners see: revenue, expenses, net profit. But what is actually impacting the business is your cash flow, your debt obligations, the tax exposure, what is going to be taxed at year end, your inventory, your owner distributions. This is going to highlight the difference between basic reports and a full financial visibility. When you start looking at everything as a whole and not just a fragmented portion, you will notice a huge difference in visibility for your business and the decisions you can make based off of that. Why does this really matter? When reports don't reflect the full financial picture, you as an owner may delay hiring when you can actually afford it, spend when cash flow is tighter than expected, misjudge your profitability, or be surprised by tax liabilities. If you have had years of losses and all of a sudden you have a year where you make $150,000 in net income, are you ready for that 20 to 30% tax hit between federal and state? Where are you truly with that? And are you ready to have a cash outflow of $30,000 to $50,000? If you're misjudging your profitability, you might decide, hey, we could actually do this item when you can't because it isn't truly ready. If you're delaying hiring someone working your income isn't showing this, then we have an issue also. Can you afford it? If you start to restructure your compensation and allow you to take the act while also paying a doctor to do hours in full, does that work? What financial really? This is a different one, but the thing you want to see when you are working properly, we want you to know that the real profit margin is. You make 5% profit margin, we're in a healthy, extremely healthy 18-20% margin. We want you to know what the true cash flow position is of the business. Are you burning at, or have you been at a certain $5,000 and $50,000 a month? That is break even. How many folks you need to see a dollar amount average per visit per day to meet your actual fixed cost at a month at 20 days a day? Upcoming tax exposure. If you are like most veterinarians, you are in work. So what does that like when you have $100,000 profit? There's no cash in the bank. Now that has to flow to your tax return. Ready for the hit there. And where you make growth decisions, they are financially safe. Before decisions are made, you want to know you are financially safe. That with saying, if you are in a position where you have healthy growth, you might be able to take a little bit of a haircut by hiring someone, another veterinarian, expanding services, knowing it's going to make it up, even if it takes a little bit of time. The clarity that this will bring will truly replace guesswork in your business. If your financial reports look fine, but you still feel like the business is financially unclear, it may simply mean that the numbers need a deeper review. We offer a free strategy call where we walk through your financial reports and help identify where clarity may be missing. You can reach me at my phone, 479-308-8360. by email, joseph@hensoncpagroup.com. You can also book a call in the link below. It's go.hensoncpagroup.com/mistakes-calendar. It is right below. We always have it posted. Get a hold of us. If there's no spots available, email me and we can see what we can do. But until next time, guys.